Long iron butterfly put, or a diamond put butterfly as we call it. This is where you buy an at-the-money put, sell two puts further down, and then buy an additional, go long an additional put on the other side of the two short puts. It forms a diamond like you see on a playing card. You use a trade like this when you expect the market to be range bound and go down but not go beyond a specific point. The profit potential is limited to the difference between the long put and your short put, less the cost of the spread. That's your maximum, or what we call your sweet spot, where your short options are sold. The maximum profit is achieved at expiration if the market is trading at the short option strike price. However, these trades have a pretty large profit playground. The risk, well, being long the outside options and short the inside makes this trade with makes it with limited risk. So the trade has limited risk, no margin requirement. Now, to keep this risk limited to what you paid for the spread, your long puts need to be the same distance from the short puts. Moving right along, we'll show you an example of a diamond put butterfly. Here we're looking to buy a 114 put, sell two 112 puts, and buy a 110 put. What we're looking for is we believe that the market will be somewhere in this range come option expiration. Remember, a market spends 80% of its time trading in a range, 20% of its time changing that range. Okay, now, keep in mind when you're doing this type of trade, there are 4 options. And if your commissions are excessively high, you may not be able to, it may not make sense to do this trade. Okay, so we're buying a 114, selling two 112s, and buying a 110. Now, even though the 110 is very little money, $15 or $30, it still adds protection on the trade and keeps it from having a margin requirement, and also protects it with limited risk. 28 days later, the market drops strongly in your favor. Now, we paid $312.50 for the trade. Now, the commissions on this are at $50 a trade. So, we're showing, so that's a total of $512. The option trade is making $625, so you're only netting out $112.50. Now, if at expiration the market's at the 112 level, right here on the purple line, you'll make as much as $2,000 on the trade.